Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's August 5th. And I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So I did something for the first time ever last week. I took the plunge, and I bought my first gun. The Glock 45 9mm, and all the gun people are going to say, you should buy this gun instead. This gun. It's such a diehard community. It's awesome. Getting so many emails. All the gun owners out there, especially people living in the South, you're like, Frank, it's about time. I can't believe. What are you waiting for? The Northeast, where I live most of my life, 36, 37 years, you can't own guns, right? In New York, I mean, outside of hunting, it was never part of our culture, right? I mean, growing up in the South, it is part of your culture. New York, nobody talked about it, ever. Nobody owned guns, really. You need permits, stuff like that. But in a lot of the southern states, you really don't need anything. You need a license and you can get a gun. It's pretty easy. That's what I learned, being down in Florida for now a little over 10 years. Everyone owns a gun. Everybody I talked to. It was crazy. So I went on the podcast and I was thinking about buying a gun, and I had a subscriber reach out. His name is Rob. One of my subscribers happens to be a gun dealer. Actually drove from Atlanta to North Florida to train me, or at least go over the basics with me, and shoot the gun with me at the range in Jacksonville. And then he just drive down here for me. I mean, his kids were playing a lacrosse tournament in Orlando, so I was very thankful that he came down and helped me out tremendously. But he took the time to come to my office the day before, go over all safety measures with me, and then met at the range the next day to shoot. And I did okay, some bullseyes, but not many. But the funny thing here is Daniel Creech, who works with me, came to the range. Now, Daniel's from Ohio, but spent a lot of time in Montana. For me, I never put two and two together. I'm like, Daniel's a great guy. Again, I'm not a gun guy, and but Daniel is. So Daniel gets up, starts shooting, and there's 4 targets, right? There's one target with 4 separate bullseyes. And he starts shooting, and he's like destroying them. He's hitting bullseyes like crazy, to the point where the guy that actually works there, right, who just makes sure everyone's following the rules while they're shooting, he leans over to me and says, man, that guy could shoot. Which I thought was funny because I never knew. Again, I didn't put two together. But Daniel grew up shooting guns. I thought it was pretty cool just to watch him shoot. So for the record, if newsletter performance has been pretty good, if I do have some bad picks and you think of coming to my office saying I'm not worried about Frank because he doesn't know how to shoot a gun, Daniel works in my office, and the guy will shoot your eyeballs out from 20 yards away pretty easily. That is a joke. I am kidding. For everybody out there, the most serious people, Frank's going to shoot his subscribers. No, we're not. No, we're not. But all kidding aside, I never thought my entire life that I would own a handgun. Especially having young kids, which, of course, I plan to teach them how to shoot once they're old enough and the gun isn't going to be locked up. But it's a different world today. I mean, people aren't scared to break into homes or rob homes. I mean, there's little consequences now. You can slam a police officer in the head with a metal pipe when he's trying to protect and serve, and all you need to do is pay a $7,500 fine, and you're out on bail the next day cheering, going, yes, I'm great. But I say this a lot because I'm not a paranoid person. I mean, I skydive, bungee jumping off buildings like in Vegas. Yeah, I'm always a believer in statistics and data, but also use common sense to come to my decisions. And when I'm looking at the world today, it's different. I mean, it's crazy. We want to defund the police when there's very little statistics that support that, or the reason why we should do that. Very little. I know by saying that it makes me a racist. I'm an outcast. I'm an asshole to people for the left. I get it. But I support police officers, black, white, male, female, because most, more than 95%, do an amazing job and risk their lives every single day. It's just amazing how so many people are shitting on them now. You're lumping them all together because of a few bad apples. It's insane. But for me, becoming a gun owner for the first time, going to be going through more training, taking this very, very seriously. But I'm very glad to own one now. And I pray to God, seriously, pray. I never have to use it in a hostile situation. But I'm glad I have it. I just mentioned statistics and common sense real quick, because I had several people reach out to me. I've been providing you a lot of statistics on COVID, why a lot of this is bullshit because of our politicians. And of course, you have people from all over, just few emails. Where'd you get those statistics from? You're crazy. One guy pointed out that crime's going down in most cities. Give you evidence of this like the past 3 weeks. He sent a couple of charts and figures. And you know what? If you look at the data and say total crime, it is going down a little bit. That's if you include rape, sex abuse. Hey, if you look at homicide, from the links this person sent me in Washington alone, they're up 18%. Motor vehicle theft up 32%. Arson up 57%. But when you include all the stats, all crime, you'll see Washington down 17%, which is pretty freaking obvious, right? Since most people, they're not even on the streets today. In LA, from another link he sent me, homicide is up 32%, robbery up 5%, motor vehicle theft up, but there was a 35% decline in burglary, as most people who are stealing stuff have masks on, so they're getting away with it. They're not getting arrested. But when you look at the data, and you can interpret it however it's going to support your agenda. I understand that. But this is where common sense comes in. We just can't look at data and say, like, COVID, I'll get to this in a minute with COVID. And the death total's rising, of course. But wait till you hear the numbers, how great they've been. No one wants to talk about that, right? I mean, no one wants to talk about that. It's just the cases are exploding. No one's, I'll get to share more numbers with you. But when it comes to this person talking about crime, use your common sense here, because I'm going to ask you this question. This is all that matters. This is all that matters. Would you take your kids for a walk through a major city at 10, 11 o'clock at night right now? Would you really feel safe doing that? I wouldn't. There's no way. And I can honestly say for over 30 years, I've never felt like that. Basically since the days of living in New York and Dinkins was our mayor, New York City was a disaster. I mean, holy cow, you go by 42nd Street, had crack vials everywhere, graffiti everywhere, video porn shops. A lot of the blocks, prostitutes walking the street, incredibly dangerous. For 30 years, I've never felt like that, where I wouldn't take my kids out on the street any place in America. Well, most places in America, you know what I mean? But the major cities, really? And New York is beautiful, New York City now. Holy cow, you go there, it's beautiful, tourism, it's nice, it's great. I took my kids there to see it. First time, a couple of years ago. So again, you can look at the stats, interpret them however you please to support your agenda. I have no agenda here other than to make you money and tell you what's really going on. And when it comes to COVID, I have a doctor reached out. His name is Matt. He emailed me and said, I was listening to the podcast. This is from last week. He made some strong comments about the death rate of COVID versus the flu. The image shows a clear difference, and he sent me an image, in the number of deaths for anyone aged 25 plus. In fact, you stated the flu has a higher IFR, which is an infection fatality rate, than COVID. Now, I realize that you stated that people with underlying conditions are at a higher risk and that this image doesn't control for underlying conditions. That's interesting. Because we can make the assumption that the number of people with underlying conditions doesn't change from year to year. Thus, I am not sure how you arrived at your statement that the flu has a higher IFR than COVID-19 for anyone under 65. If you have data to support your claims, I'm happy to look at it. However, I am deeply concerned about your statements of stating the facts if you don't have the data. What facts are you using to make these claims? How am I supposed to trust you with investing advice? Why am I a paying subscriber if I can't trust any facts that you provide? If you can't provide me with any nonpartisan data that supports all these facts, I would like a refund for my Curzio Research Advisory subscription. So Matt wrote. Now, Matt, to be honest, when you ask me why are you a paying subscriber if I can't trust your investment advice, the old me would have answered this by saying maybe you're a subscriber because I made you a shitload of money since I started that product, and you're paying less than when it cost to fill up your Mercedes last month. And I keep this price super low so every mom and pop investor can afford it. They can get quality Wall Street research. It's going to educate them to become better investors, create generational wealth, or maybe, hopefully that their kids are going to be secure and their kids are going to be secure, right? And given that quality Wall Street research without having a $5 million account at Goldman Sachs, that's the old me. The old me would have said that. But I've matured over the years. Definitely matured over the years. Instead, I'm going to answer you with numbers. So according to the CDC, which, right? What did you say? Partisan, nonpartisan, right? Everybody believes in those statistics, right? CDC. There are estimated 48 million people in the U.S. who had the flu last flu season. So that's October through April. Okay, that's the average, 48 million people. That resulted in 43,000 deaths. That's 0.9% of people who contract the flu end up dying. Pretty simple. Now when we look at COVID, the CDC latest stats on the site are from July 25th. The latest stats where it lists the people who have died of COVID based on age group, right? And there's subsets, 55 to 65, 65 to 75, 75 to 85, 85 years and up, right? As of July 25th, 135,000 people have died in the U.S. from COVID, while 3.3 million people in the U.S. have been infected from that date. Amazingly, if we look at the groups of 55 years and older, it accounts for 125,000 of those deaths. That's 92% who are in the danger zone, right? And 55, I said 60, doesn't matter, right? Because can't get 60 because they go between 55 and 65, doesn't matter. Maybe it's a little bit high, right? So you're looking at maybe it's 91%, but 92% of the total, right? Now, let's take out that subgroup of people who are over 55, which, by the way, doesn't include people with respiratory problems and people who are obese either that get this. Also, the people that die, it doesn't include, you're a doctor, you know this. So if you have cancer, terminal cancer, you're going to die 3 months from now, and you get COVID and die, you get listed as your death is COVID, not cancer, right? You know that because you're a doctor. You should know that. I hope you know that, okay? I'm not including those people either, right? So if we're looking at the group under 55, that amounts to 10,717 people under the age of 55 that died after getting infected with COVID. And July 25th, again, right, there's a total of 3.3 million people in the U.S. who were infected with COVID. So when we do the math, the amount of people under 55 years of age that died after being infected with COVID is 0.32%, much less than the 0.9% of people who died from the flu the last flu season. So if you still want to cancel your subscription, Matt, you may do so. It's up to you. You are past your refund period, though, but I'll give you a refund anyway. I don't mind. I don't mind the questioning of stats. What I mind is when the threats of give me my, again, this is one of the cheapest newsletters we have, and I keep that price low. It's our break-even price. Why? Because my goal is to give you that type of research for very, very cheap in hopes that you'll subscribe to our more premium products, which is how we build our business. So for me, I've always been a show me guy, not a talk guy. I want to show you the results, and you're going to say, wow, this guy knows what he's doing. Here's why he has great products. Here's why he has great people working under him that can help me make money, that can help me generate that generational wealth I always talk about. That's the goal. But that's what ticks me off a little bit. But you're a doctor. You should know these stats, right? And these stats are from the CDC, and it's fine. You should question everything. That's okay. But remember, I do not have an agenda here. If I see these rates skyrocket, it's crazy. But it even gets more encouraging because if you're looking at data from this week, guys, this week, the total U.S. case mortality rate has gone down tremendously. As of last week, it's 3.14%. That number was 7%, close to 8% in May. And it's 3.1%. Why? Because we know more about this disease now. A ton about this disease. We're not looking at the beginning with these stats where New York, they didn't know better. Every politician's blaming each other. But when people got COVID, they put them in nursing homes. That's where most of the deaths came from right away. It's why the numbers are skyrocketing. Now we understand the risk. We know if we keep these people who are in that danger zone and we protect them, these rates go down tremendously. Tremendously. And when we look at kids, guys, I mean, kids under the age of 15, we have 42 kids, which one kid is, again, a fatality for a kid, tragedy. But we have 42 kids of the 135,000 plus who died of COVID in the U.S., which amounts to 0.001%. I mean, the data supports our kids going back. Again, I have a lot at stake here, too. One of my daughters, as you know, takes medicine that's going to lower her immune system for ulcerative colitis. That's what got diagnosed now after I know that yesterday. So it's more ulcerative colitis than Crohn's. It flips back and forth for people that know that. So, and my daughter's doing well. Thank you very much. But, I'm involved in this too. And I'm going to send my kids back to school. But you're looking at the data here. Come on. Yet we have teachers in LA who said they want to defund the police before they go back to work and start teaching kids. And you know what I call that? I call it a fucking disgrace. That you would damage kids' lives just to support a bullshit political agenda. That's where we are in this world. Why am I bringing this up and talking about this so much? Because it matters for your investments. It matters that this shit's going to go on past the election, even though it's nonsense, even though we should be opening up the economies like crazy. The death rate is going down tremendously. It's going low. Look at the CDC. Just go on the site. You're going to see the weekly deaths. Look at the weekly deaths from the peak to now. You're going to see them coming down tremendously because we know how to, and people who get the worst cases of this, where they have the worst symptoms, we now have drugs out there that can lower this or lower that fatality rate by 60%. That's coming out of Gilead. I named the drug, but I always pronounce it wrong. But we know what we're up against. We didn't understand this 3 months ago. We do now. We understand it now. If you get this, you're going to be okay. I tell you to go home. Hopefully you don't get it that bad. And if you need to go to the hospital, there's respirators, there's room in ICUs. Come on. It's all there. This isn't bullshit sites that I'm pulling from either Fox or CNN. No, they're going to pull whatever they have to support their agenda. Again, their agenda is to make money. They're companies, and they make more money by bashing Trump, by supporting Trump 100%, by just telling you all kinds of bullshit. It doesn't matter. I mean, think about it. Think of Floyd. The video just came out, the full video of what happened. Why in the hell don't we have access to the full video? I mean, this is America, right? This way we can make our own choice. But why wouldn't you have access? It's just amazing what is going on right now. What's being hidden from you? What's not being told? The information. Guys, that's why I have this podcast. I've done this all my life on Wall Street. It's for me, I'm the first to call bullshit on things, to let you know things you don't have to worry about. I've been doing this for 12 years plus doing this podcast. I'm going over the statistics because they're extremely important. Because people that don't think that you're safe, they're going to go out there and there's trouble. And they don't want to put their kids in school, which is insane. When you look at the numbers, it's insane. There's not one recorded case, not one, that a kid has transmitted COVID to a teacher. Not one in the U.S. I'm not saying we don't protect the teachers. I'm not saying every kid should go back. Every parent has their right? Thinks differently. But we need to open up the schools and let the parents make their own choices. If they want to bring them back or no, maybe some are nervous or not. But we need to open them up based on statistics. We need to open them up. We're hurting our kids. LA teachers don't give a shit, but hey, let's defund the police before I go back to work. I'd fire them all. I'll probably lose subscribers. I got a lot of subscribers in California. I don't care. That's bullshit. Anyway, just know the facts. I appreciate all the questions coming in. It's awesome. But everything you hear on TV, everything you hear out there, just do your challenge. Do your own research. There's a lot of great sites out there. And you'll see almost, if you're looking at unbiased sites, you're going to understand COVID, a lot of this is BS right now. A lot of it. Do we have to worry? The people in the danger zone, of course, they have to worry. Everyone else, this is more like the flu. The statistics support that. Now, great interview for today. I had this person on when his stock was at 4. Now it's at 10. Scot Cohen, executive chairman of WRAP. Been a roller coaster ride, went up to 13, reported earnings, new CEO, stock came down, got lots of questions on it. There's going to be a fantastic interview and ask some tough questions, no layups. Again, guys, this is very important. This isn't promotional. This isn't anything. This is something that I own personally. I still have my original position. I haven't sold shares. I love this company. If they get it right, it's going to go a lot higher. But I asked him those tough questions, the questions that you want to know, your concerns. He's going to answer them all. Fantastic, fantastic interview coming up. And then my educational segment, I'm going to explain why this move that's likely going to be done by a Fed, to move very few people are talking about, could result in this small group of stocks surging over the next 6 to 12 months. This is not a BS segment. This is something you need to know because the Fed's about to do something. It's only done once in its history. It did 80 years ago. You think they run out of tools? Here it is. Here's a new one. But it's not that new because it's been done one time during World War II. And if they do this, there's one sector of this market right now, that could explode in value. It's a great, great educational segment. Please listen up. It's a way to make a lot of money. This is how I believe I'm positioning myself in it. Fantastic. But first, let's get to my interview with the one and only Scot Cohen. Scot Cohen, thanks so much for joining us on Wall Street Unplugged again.
Thank you, Frank. Good to be here. Thanks for having me on.
No. The last time you were on a few months ago, your stock was in the 4-ish range. It's now over $10 based on a lot of positive developments. Now, WRAP is a position a lot of my listeners own. My subscribers are in at much lower prices than where it's trading today. And I want to get to a lot of stuff today, right? Recent earnings call where your stock did pull back over ties, the new CEO announcement, and also short sellers and things like that. But I want to start from the beginning to get the newest listeners up to speed. As someone myself who's been covering small caps for over 2 decades, I mean, the progress you have made with this company, especially off the past 18 months since I got shot with more like the prototype, I don't know if that was a great idea or not, is remarkable. Can you talk about that, of how far you've come in 18 months? Because when I compare this to Taser and where you are, you're light years ahead of them. It's kind of amazing how far you've come.
Sure. Yeah. So let's just start with the product. Yeah, that's true. When you were wrapped in my apartment almost 2 years ago, 18 months ago, product was working probably 40 to 50% of the time. When I say working, I mean wrapping consistently. So it was anyone's best guess. The laser, I think we just had put the laser on. It wasn't stable. We were using many more suppliers at the time. Our costs were higher. Now I'm happy to report that this wrap, the BolaWrap's working over 90% of the time, and we're closing in on that. It's just getting better and better. We're using less suppliers. We've been able to bring our costs down, and now with the new hire that I'm sure we're going to get into with Mark as CEO, he's got a lot of changes on the manufacturing side, on the logistics side, that's really going to drive costs down, and we're hopeful that the effectiveness of the product is even going to get better from here. That's one. So starting with product, training, Frank, when you first got shot, we didn't even have training established. We've got a whole master trainer program, train the trainer program, that's been in place for almost a year now. We've trained hundreds of departments. There's thousands of line officers trained. Just take one city right now, LAPD. We've got over 1,100 trained. So I don't even have the total number of trained, but it's in the tens of thousands. So we had no training, barely had customer support set up. Our balance sheet, when you first met us, was probably at the time around 15 million. And I'm glad to be able to talk about a $45 million balance sheet at this time. Liquidity's increased in just the way that the shares trade, where we were in maybe 1 or 2 departments at the time in pilot tests going on. And now we're close to 200 departments. The C-suite has just improved up and down at the executive level. So we're just bringing better people on. The product's getting better. The environment has changed so much, as we all know. This is really, people are begging for an alternative. The communities are begging for more training. The police are wanting and needing alternatives to what they've got on their belt right now. So you got product improvements, you got an environment that's perfect for this time for our product, and you got leadership that just gets better and better. So and of course the balance sheet, just to name a few.
So, when I look at this and you tell me that, it's great. I didn't really know that it was only working 40, 50% of the time and the laser was a little off. So it's good to know that now, I guess. But it just goes to show you, guys, I'm there for you. I wanted to do the research. I got shot by this, and then I put out a video to everybody just to show everyone. But for me, the big story was you had retired police there. And when I interviewed them, for me, this was more than something I thought people could make a lot of money off your stock. I got emotionally involved in this, seeing their faces, interviewing them, where they're like, they're in the field for over 30 years, some of these guys, and even longer. And they just knew if they had this device, it could have saved lives. And nobody, what I learned too, they're like, nobody wants to take out, even if it's a clean shoot, you never, you have to live with that for the rest of your life. And they've seen so many officers like that, like deal with that, right? We only hear about those stories where the 4 or 5% that are bad, or even less than that. But most police officers, they don't want to use their gun. They don't want to shoot anyone. And just learning about the device then, when your stock was just on the pink sheets and getting into this thing, is pretty incredible. So, no, I appreciate you letting me in, and even my subscribers too, recommending it very, very early, which I want to thank you for. Now, A lot has happened.
When you came in, we had probably maybe 100 to 150 investors. We hadn't hired Tom Smith, the co-founder of Taser. So you came even before Tom. You came when, like I said, maybe 100 or 150 different investors. Today we have over 25,000. And the interesting thing about it is they're mostly from law enforcement. Over 25% of our shareholders, it turns out, are from either law enforcement or they have friends that are in law enforcement. So you were way before any of that started, super, super early. And you're right. This isn't just a product that the community feels good about or can relate to. Say, yeah, we need something like this. We need an alternative. But the police themselves, turns out that the police themselves are open armed to us. They're embracing this, and they're excited about it, and they're pushing for this cause. So we've got both the communities and the people that are serving us, the law officer, the police, actually supporting this coming from both ends, which is really unique, very unique for any business to have that kind of welcomeness around our product.
Yeah, I appreciate that. I know a lot of my subscribers are in this early and should be in below $10, all of them, if not maybe a tiny bit more, but most of them are doing well in your stock. However, with that said, we've seen the stock go up to $13, a little bit higher than that if you're counting like the intraday high. And then when you reported earnings, it pulled back. And I want to talk about some of those things, that the reasons why it might have pulled back. But I want to talk about the biggest news. And I know this is really big for you too, is the hiring of a new CEO, Mark Thomas. This is a guy that's a veteran, has experience in really, really, really growing companies. What does he bring to the table for you, and why is this a game changer?
Mark brings, think about this guy's background. He's coming from Stanford as an engineer, then opting to go into special forces, then opting to from there right into the White House, and then from the White House working for a senator, then getting all simultaneous to getting a law degree, getting a master's in business, and getting his engineering degree. So he's doing all this while he's serving the country, then serving the country at the White House. Then he goes to GE to run multiple divisions at GE, and then goes into private equity. That kind of experience around manufacturing, logistics, even sales and marketing. He's got it all. And his leadership skills are what's really stood out. This guy knows how to lead. He led while he was in service. He's led while he was at GE. He's had numerous leadership roles when he was working at the private equity fund. So Mark, at probably the things that come to mind of why he's going to have so much impact is his ability to lead and to make sound judgments. Is another big one that I think we all, when interviewing Mark, were able to relate to and see very clearly that he had those just two fundamental qualities about him that we thought could have big impact for this business.
Yeah, I mean, hiring Mark, I thought was amazing. Another huge positive where you have over $40 million cash on the balance sheet. I mean, you're a small cap company that, again, if someone's covering this industry a while, that's where you want to be, right? You want to be where, hey, our product is no longer like a proof of concept. It's actually being sold in law enforcement magazines, and we have a huge cash hoard to market this. It's the perfect position for a small cap. With that said, one of the negatives, I think, we're on the call. What I hear is they expect the backlog to be a little bit bigger, and the backlog was 1.5 million. However, for me, I looked at it as, we're in a COVID world. You were doing hands-on training, which requires a lot of travel, but now you announced a virtual training, which is amazing. And I've seen this up front even on some of your calls. Talk about the backlog, because right now, if we see this, and I know you know this as well, for the stock to get to the next level like it does with Taser, and it's much faster, much ahead of their growth trend where you are compared to where they were the first 24 months, first 5 years, probably 6 years. Talk about the orders or how many police stations are testing this device, and do you see those orders going up considerably? Because it seems like everywhere I look, they're testing this. I'm hearing it mentioned to the president, directly to the president from politicians. We need to have more of these. But eventually, as you know, you want to see that number grow.
So a couple different ways to talk about address. Well, let's get to that question a couple different ways. Starting with just Tom is a co-founder and architect of Taser, says it took Taser 15 years to do what we're doing in 1 year. Okay, so just starting there. Police aren't quick to change. It's hard. This is a group that has unions involved and has lots of different take points politically. So it doesn't happen overnight, but when it happens, it really has sustainability. And when that change takes place, we think it's going to be a real domino effect. So being mindful that our quarters are choppy in the beginning, just like any new business. It's a new technology. It requires training. It requires marketing and just some time to get through budgets. But with that said, the pace in converting from the demonstrations to orders is happening. And it's hard to get the real good, strong visibility at this point in time. But the more that it's only been really 12 months since we started selling it, maybe just slightly more than that. And so as we do more demos, as we have more pilots running, as we put out more quotes, I don't know if you were on that quarterly call in the second quarter, but we talked about 30 to 40 different inquiries coming in from departments a day. So that was happening a quarter before. Last year, this time, 30 to 40 inquiries coming inbound a month, or actually probably not even that. We were having that probably on a quarterly basis. We're having that on a daily basis now. So the pace of this has just picked up. And you want to talk about the backlog? Yeah, it's a lumpy business right now because we're just really coming out. But the big thing to look for those major cities to start rolling out these units on a full deployment. Look for some big international contracts that will be, we think they'll be chunky, but when they come, you should see that reflected in the top line, and you'll see that also reflected in the backlog. So in the beginning, it is chunky and not clear, but as we start getting into the rollout, I think you'll start to see things smooth out and it will be more consistent. So that's how we're seeing it at this point.
Yeah, and you're definitely right about Taser. I mean, that's something I covered in the single digits when I was at Street.com and just saw their market cap swell. It's over $8 a share. It's close to a $6 billion company today. And it was incredibly lumpy back then, just, before they really started getting going and just light years ahead of them. So I love that. But in today's world, it's so different with social media. 3 months is a long time, right? But for me, I love that you explain 18 months of how far you come. I want to talk to you because you're familiar with this, but because you're in the industry for a long time, myself as well. When you look at short sellers, I mean, you have short sellers and they use platforms like Seek and Alpha, a whole bunch of other ones where they'll build up a huge short position. You can't do this on a long side. You can do it on a short side for some reason. Build up a massive short position, come out with, whatever you want to say, and disclaimer, it's going to say this, we think it's reliable, but it may not, or whatever. And then, these guys could be out of their position within 3-4 days. But those short reports I've seen, I've got a lot of emails from subscribers saying, should we worry? And I read the whole thing. And, he highlighted the revenue numbers and how, we haven't seen any big departments and stuff like that. But he also highlighted a lot of things that were just out there and didn't make sense and were lies. How do you deal with this as a company? Because management teams deal with it differently all the time. And I've seen some deal with it bad, some deal with it good. But, when you're looking at this and you're looking at long-term goals, do you pay attention to things like this? I know you see it coming, but it's kind of funny how almost every small cap that I've covered that has this massive growth trend, you always see this, it pulls back a little bit, but it's kind of just like someone speculative and just trying to make money really quick.
Mm-hmm. Yeah. So let me answer the first part. So yeah, we first started probably about 12 months ago. The first short started building his position, and they were out loud about it. There was a published report on it. And the short really never went away. My belief, and I'm not the only one that has this opinion, is the short's just getting more and more, I should say, out loud and accelerating their efforts to advertise this position. They've been short since $3. So when a stock goes against you, you're short at $3, and now you're in the double digits. that becomes more painful for a short. So you start figuring out how many, if you can get more people in the short idea, you can scare out retail. And that's precisely what's happened. They were marketing that short report weeks, or probably a week before it came out. They were really trying to get people behind it and trying to scare retail investors the best they could, which is fine. So to answer your question, does it worry us? It would have worried me more if we had $3 million on the balance sheet and a stock that wasn't really trading. That would be concerning. If we had a weak pipeline and weren't confident about our business, that would be concerning, and felt like it could run certain product liabilities that would be hard to account for. That would be concerning, and all those things still concern us. But we're not going to be hurt by a balance sheet. Our capital with that kind of cash position, we're going to need capital for years to come. So I'm not worried about that. The product gets better and better. When we wrapped you 18 months ago, pretty effective, but now it's a completely different story. You're not moving post a wrap. You have no chance to move in, particularly when we're hitting high and low. You've got no, it's that much more restricting. So, yeah, I'm grateful that the liquidity the interest in this has increased and continues to increase. Like I said, when you first came on, there was probably 200 to 300 shareholders. Now it's 25,000. I think we jumped 8,000 in 6 weeks. So I don't think that's going to slow down. I think people are hearing about this, they're reading about it, they're seeing this, they're connecting George Floyd issue and that situation, the protest, with our company, with our product. And so to put those two together, our product with the current environment is really powerful, which I think should get more and more people interested and engage more and more people. I think our shareholders will go, that number increases, liquidity increases. And like I said, we're not a balance sheet risk anymore. So the shorts, it doesn't bother me. It never really has, to answer your question. I think the more short they get, as we start to hit on our business plan, it becomes a really painful situation for them, particularly if they've been short in the low single digits. It's expensive to hold that short position. The cost to borrow the stock is over 50%. So in other words, if you're lending shares out, or if you're borrowing shares, you're going to pay 50% interest. So when you're paying 50% interest and you're down, you started shorting it at 3 and now the stock's over 10, that gets very expensive and could be very dangerous, because if we have a taser-like moment, like you catch that big order in the stock in taser in 1 year, and you know this, went from 5 to 105 in a 12-month period of time. That was because of 1 or 2 orders that they got. If that happens in our situation, which is certainly possible given the size of the departments we're working at domestically and internationally, you could, as a short, you could be put out of business. So it's a very dangerous, shorting a story stock is very, very dangerous. And when those story stocks actually start performing, you have a taser-like moment where your stock goes from, up 20-fold.
No, it definitely makes sense. I'm glad you brought up like the shorts and the interest on the shorts and how that is. But I want to get back to one more thing here. Is you talk, how many departments did you say was it inquiring about the device? Law enforcement departments?
On the quarter call, you heard that we get 30 to 40 a day for the last 6 weeks or 2 months. It's probably been. You heard that it's that the inbound inquiries that we get are over 50 a day. These are from departments spread out throughout the country.
So talk about, I want to get to that virtual training part, because I mean, this was huge for you, right? Because you I remember talking to you and you're traveling a lot, and your teams are traveling a lot, and they're training these officers on site. But has that resulted, it looks like that more people are inquiring, but what about the training part? So are you still I think the number was 250 plus police departments are currently, training or being trained or whatever it was. I forgot that number. But are you seeing that number increase now? Because, if you didn't go to virtual, it would be impossible for these officers to train. That's why I'd be nervous about the orders. But talk about the virtual and how important that is, because it seems like, officers and law enforcement agencies are perfectly okay with that, as long as you're training us and we have that certification.
Yeah, so there has been virtual training available to large and small departments. The problem is just cost. The virtual training has been expensive. There's just several companies that manufacture that equipment. They're big screens. They cost hundreds of thousands of dollars for that kind of installation. So it's a big commitment. We've gotten that price way down with this new partnership that we launched, and it is going to be a subscription-based model, and it's the virtual training that we're going to be doing that it will allow you to get the certification without us having to be there. So this is as much about, you can't just put the BolaWraps out there without training. So it does complement what we're doing. But we actually think the virtual training piece of the business could be much larger than BolaWrap itself. So you have BolaWraps or not, training is going to be a massive component of any department, big and small. And that's obvious just with all the noise about defunding police and what we're hearing about how police are handling these protests and handling today's environment. But we all know that to have an offering, have a training offering around BolaWrap and allow them to deploy it without us being there really scales our business, helps us with not having to, it's impossible to service 18,000 departments around the country. So this gets us way more feet on the street. We're able to certify at a much faster rate. And most importantly, we're able to train people how to deploy this product in a safe, effective manner remotely, which is a really awesome, an awesome step up for us. Saves us a lot of time and money.
And I guess just the last thing here, I guess what everybody wants to know is talk about the next steps for the company, right? You put yourself in a position I mentioned earlier where a nice cash hoard there, you're small cap where now this is being sold. You have a product that's actually being sold. So it's no more that, hey, we have to prove this concept. It works. So what are the next steps now that you're in this great position as a small cap company? And I know you talked about new BolaWraps. They're not going to be as loud when they're shot because they're very loud. So I got shot by this thing. And if you do that in Times Square, it's going to scare the crap out of people. I know you talk about where they shoot two and not just one, but talk about that, maybe your growth plans of what investors can expect going forward, because we all know, okay, we have to get more orders, but what are the next stages? Because hiring this new CEO, it's clearly like you understand, like it's about growth right now, and you're going all in on this.
Yeah. So just to go back for a sec, once you start, we feel like this is going to be a need to have product, because if your officers are going to a dispute or confrontation and they're using a aggressive use of force, let's say a gun, taser, pepper spray, and they don't start out with a lower use of force, we think that is going to be more and more criticized. It's going to be looked at in a negative way. And so this is going to be a required piece of equipment to come early with the BolaWrap. One big department, and now we're testing and deployed in several large cities, but one big one that goes full deployment will really, we think, not only wake up that area, let's say that state or that region, but should start to open up the rest of the country. And it might even start internationally, where you have one country deciding to go full deployment, and it could have a ripple effect back here in the States. So I'm looking for I think we're all looking for one or two of these departments to go full deployment and sending a message that will be heard around the world. When you get that coveted real estate on the belt, there hasn't been a new device put on law enforcement's belt in this country in 30 years since Taser. You start seeing BolaWrap show up in those local communities with on the officer's belt. That's coveted real estate, almost impossible to get on. But once you're there, Frank, you start getting into other business lines. You start getting into the data capture. You start getting into cameras. You start getting into being able to pivot into other areas as long as you're on that belt. We've been approached or talked about this by plenty of strategic partners. And the big question is, if we're on the belt, then we could go lots of different ways. And clearly, Taser took advantage of that real estate that they were able to get onto, and created a $6 billion market cap as a result of that. We're still we're really in the early stages. And if it becomes clear that we're getting on that belt and we're capturing that real estate, one small department or large department at a time or country, then you'll start seeing some new lines of business that we'll probably be getting into really quickly because we own the space. We're there. We're present. And from once you go from the belt, there's lots of other ways to sell into those departments. So those are probably that's the next big play for us. Establishing space on the belt, I think, will unlock the value that was fortunate enough for the Taser investors to experience a decade ago or so. And I'd like to believe that we're next.
No, that's great. That's great. Well, Scott, listen, I love you coming on because you don't come on when your stock's at all-time highs. You come on even when your stock pulled back to 4 with all COVID and everything going on and stuff. And for me, I want to always be transparent with my subscribers. So I know a lot of people do own this because of me. And you coming on and just giving us an update, I really appreciate it. I know how busy you are. I know it's crazy. And I just want to say, thanks for that update. I really, really appreciate it, buddy.
Hey, Frank, thanks for your support. And we are as strong as we've ever been with the leadership, with the C-suite, with Mark, with the new people that have been coming on board with our balance sheet, with the training protocols, with the development of the new product. This is in the environment. We're fortunate to be here, and you were first. So we are respectful and very grateful for that early on support.
No, I appreciate it. All right. I appreciate it, Scott. And hopefully we'll have you on soon to update us. Thanks a lot, buddy.
Super. Thanks, everybody.
Hey, guys, great stuff from Scott. And I want to let everybody know, which most of you already know this, you should. I'm Curzio Research, we're 100% independent, right? I don't get paid by anyone to recommend their stock. I have to show you gains. And if I do, hopefully you'll subscribe to our products here, right? That's how it works. Nobody pays me nothing. I never received money, never took a dime for someone to recommend their stock. Now, for subscribers, almost all of you should be in below $10, which, is a buy up to price. And, take a half position if you need to, full position, depending on which newsletter. We have in 2 of our newsletters, but most of you should be in below 10. But we recommended this name a lot lower, if you're subscribed to my newsletters. So with that said, this is a small cap aggressive stock. Don't go all in. Don't put all your money in it. I mean, Scott's excited, just like every other CEO talking about their company, of course, right? I'm talking about Curzio Research. I'm going to be excited. That's the way it is. So he's excited about his company. That's fantastic. But again, it is risky. You have to do your homework on this. People asking, well, Frank, there was insider selling. There was insiders own over 30% of the stock, including Scott. They sold some of it, yes, and that's what you do when you put a ton of money into something and things start working out. You want to take a little bit off the table. But 30% insider ownership from someone that covers small caps, that's a massive, massive number, guys. That's a big number. You don't really see that too many places. It tells you that they have stake in the game to make this work. And if you're looking at a backlog, $1.5 billion, and saying, wow, it's got such a high market cap and we wanted a higher backlog, I agree. Now, if they don't see those sales explode and then I seeing that number go up tremendously, I say the downside for this, again, it is being sold. There's police departments all over the world that are sampling this thing. I think his downside is around $7 from here. If they get it right and they start getting big orders, you're looking at $34 stock. That's not out of the question. So the risk reward is still great, but there's no guarantee here. I mean, you need to know that. So for me, it's not, hey, promoting this. We were very early to the party 2 years ago. Again, he was making fun of me getting shot by this device when I didn't know that, they just got the laser and stuff like that. I just said, hey, I'll get shot by this device. It's non-lethal. Well, we'll see on me. But it's cool I put that in the video, but I really got attached to this thing. It wasn't just a stock. It was emotional behind it where, I interviewed police chiefs, a lot of work I put into the research behind this and boots on the ground, going there, interviewing these people in person. And I'm glad to see that stock's working out. So is it going to pull back? Yeah, pull back a little bit from 13 to 10-ish. And, it's a show me stock now, right? It's a show me stock. They're going to have to get orders. And I believe that they are going to get a ton of orders. That's what I believe. I just believe this device makes sense. It works. It saves lives. It prevents a lot of crazy stuff happening in the world today. And we're in that world where things are pretty crazy right now, where politicians on both sides want to put more funding specifically into the BolaWrap. So it is pretty interesting. It has pulled back more. I'm probably going to buy a little bit more. So, but that's your choice. If your full position is full position. But again, you want to highlight the positives and negatives. I thought you did a great job answering all the questions there. I love the new hire, and let's see how it turns out. But my job is to really bring on these people because I know this is a story stock, and most people on my file own this, which is really cool because you should be doing pretty well. But I want to update you constantly. Last time I had him on, it was at 4. It's an exciting story. I don't want to bring him on at 13, 14, whatever it was. I want to bring him on at a time where I'm like, wow, this makes sense right here. The stock has pulled back and didn't deserve it, and that stock has went up tremendously. But make sure you do your own homework, do your own research. There's no guarantee, and it is a small cap company. You have to be careful. You have to limit your risk at all times. So just make sure your risk reward. For me, it's absolutely fantastic, even at these levels, but everyone's different, and make sure you do your own homework. Now, let's get to my educational segment. So, seen the Fed go crazy, right? Just trillions of dollars being printed. Look at the last meeting. Every single committee member said they expect the Fed funds rate to stay near zero until 2022. They're bailing out even nonprofits, right, in their loan eligibility program. So it's buying 95% of all eligible loans made by banks for nonprofits. They're just backstopping a whole bunch of stuff, including the government. But you're looking at the Fed where people say, well, the Fed is running out of tools. And they don't really ever run out of tools. I think we actually know that. But there's one tool that they use that it's probably going to be announced over the next couple of months. I've seen a story or two. I've been doing a lot of research on this. And if they do announce this, you're going to see small caps in particular, I think, really take off here. Now, this obscure Fed tool is called yield curve control. It's YCC for short. So if you never heard of it, don't worry about it. I'm not surprised because it's only happened one time. The Fed only implemented this policy one time in the history of America. That was in 1942, 80 years ago. Set off one of the biggest bull markets of that era. So YCC, when that policy was put in place, look at S&P 500 went from its lowest point in a decade to highs not seen before the Great Depression. Right? That's how big this was. So when you look at YCC, it's like quantitative easing, but with a little bit of a twist, right? So QE is when the Fed agrees to buy a set amount of government bonds. You guys know this as printing money. With YCC, the Fed doesn't agree to buy a set number of bonds. Instead, it sets a target price and says it's going to buy any amount of bonds. The market would sell at that price, which could be limitless. And when you use the word limitless with someone that has a printing press that can print a limited amount of money, it's pretty crazy, right? For me, when I believed that this market was going to come down tremendously because of COVID, it was a little bit late. We participated in the way up. But for me, it was the numbers, like Disney reporting numbers, the stock is up. I could tell you if there's no COVID, Disney's going to be a $300-$400 stock if it's at $125, $130 now. Revenue's down 40%. Every single segment got killed. They took write-downs. The only thing that's doing that they say, right, they pointed to the amount of subscribers they have on their platform, and everybody cheers that. But the operating loss for that segment, direct to consumer, went from 500 million to 700 and plus million, right? Because, like I said, streaming is a terrible business. It costs a fortune in order for you to maintain because you constantly have to put content on it, which is telling you the more subscribers that they're adding, the more money they're losing. And that's the vision that they're bragging about. Everything else is getting crushed. But hey, we're in a different market, right? You got to look at it and say, if the Fed's going to come in and spend $6.5 trillion, which is 30% of our GDP, to keep the economy afloat, there's more trillions coming, right? But the yield curve control, in effect, is going to fix the price of bonds. And doing so, it fixes their interest rates. So they did this again in 1942 to help the Treasury fund cheap debt, and that was in World War II. But now YCC is going to ensure big companies, big corporations continue to get cheap money in the foreseeable future. I don't know if you saw the latest bonds that were raised, issued by Google. I mean, what was the interest rate on it? 0.45% or something? I forgot what. It was just, with Microsoft. I mean, these guys are borrowing money 40 years out for nothing, right? Our mortgage rates are 3%. I mean, you talk to someone in the 80s that bought a house, they'd be like, oh, are you crazy? 3%? No way. So that yield curve control, it's inevitable. This is a tool that they're going to announce. And I'm not the only one that think this. I mean, for me, there's two people that you want to follow when it comes to the bond market right now, to me. Right? There's a lot of them. You have your own name. Jeffrey Gundlach is one of them. June 10th. Again, if you're not familiar with Gundlach, he's a billionaire fund manager, probably considered Warren Buffett of the bond industry. He goes, I certainly do expect, I'm quoting him here, that Jay Powell would follow through on controlling the yield curve should the 30-year rate really get unhinged, which it is. Scott Cohen, if you haven't heard of him, managing partner, chairman, global CEO of Guggenheim Partners. They manage over $270 billion. One of the most respected people in the bond world. On June 8th, he said yield curve control could prove an interesting tool to limit money supply growth while keeping interest rates low in the event of a sudden surge of inflation, right? And what do we worry about here? What we're hearing, everyone's popping up, right? Something that I said in March when the Fed started going crazy. We're going to see inflation beyond belief once this COVID thing dies down. So here's Scott Cohen. Guy that's much, much smarter than me, much smarter than most people out there, especially when it comes to bonds. Hey, yield curve control, keeping interest rates low in the event of a sudden surge of inflation. So yes, big corporations are going to benefit. But if you're looking at what they're doing here, it's really going to inflate the high-risk assets. And if you're looking at small cap stocks, they've underperformed the market so far. In fact, if you're looking at the top 5 stocks, which account for 22% of the entire S&P 500, they accounted for over 55% of the gains over the past 12 months, while the rest of the market accounted for 0.6% of the gains. So if you don't own any of the major technology stocks, it's not FANG, take out the N for Netflix and throw in Microsoft, right? And you have those 5 stocks. If you don't own them, chances are you're flat. If you're beating the market, it's good for you. But most people aren't. That's why I'm sure a lot of you sitting home go, the market's hit new highs. I'm hearing Tesla going here, all these companies going crazy. It's really 5 companies. I mean, Tesla's getting up there too, right? Which is pretty crazy. And Netflix and a lot of technology companies. But most companies are still underperforming, which is, just the facts. But the Fed, I believe, is going to announce this before September. If they do, you want to position yourself in small caps. Now, I say this all the time to you. Every single time. Whenever we promote our products, I try to promote my products at the right time. Because the last thing I want to do is promote a crypto product when crypto prices and Bitcoin's at 19,000, right? Because it's an easy sell. Everyone's going to get in. It's a story and you get destroyed. I've been doing this for 25 years. No one's really talking about small caps right now. We have, I personally think, yes, I'm biased, the best small cap newsletter on the planet, right? Something I've been doing for 25 years. That's what I launched this business on, which is Curzio Venture Opportunities. We sell it for a lot of money. I'm discounting it by 60%. I'm going to do that for the next couple of weeks. Anyone that's listening to this, I'm going to send that out to you. And if you want to subscribe. It's up to you. Again, it's not a sales pitch or anything. For me, I want to get you involved in the right industries at the right time. Because when you do, you're going to make a shitload of money. And of course, you're going to buy more of our products. But that's my goal here. That's why I do this podcast. I want to try to help people out there. I want to try to give you guys the real story. That was the name of my original podcast when I took it over to Street from Kramer and Aaron, who's really cool. I haven't spoken to Aaron in a while. But anyway, when I look at small caps and the Fed initiates this policy, and again, it's probably going to happen, so the best bond managers say it's going to happen, you're going to see a lot of these assets really go. We haven't really seen that move in small caps. Small caps involved in technology, yes, of course, because of COVID. But you're looking at the COVID problem that these politicians are going to extend out through the election. So you're looking at 7 more, November's election, but you're looking through Q1. We're not going to get a vaccine before Q1. If it is, no one's going to take it. But Look at through Q1, 7-8 months. To put that in perspective, how bad has COVID been and to change the world? It's only been 6 months, right? So this COVID thing is going to be pushed out where economy is just going to say, we're going to close or whatever. And it's going to force the Fed to do this, yield curve control. And when they do, risky assets are really going to take off. And you're going to see risky assets even in not just in secular sectors, right? What we're seeing, what we have in technology, but cyclical as well, the ones that have underperformed. And if you nail some of these things, I mean, the risk reward, I said a couple weeks ago, the risk reward for small caps has never been as great as it is now. You might say, Frank, that's insane. Look at, Wayfair went from, 20s to 200. You're looking at how many stocks have you seen? The Zooms. These are small cap stocks that you're looking at so many of these names that under $1 billion valuation that have taken off to $5, $10, $15 billion valuations. You don't really have markets that you could do that. Now, could it reverse? Could everything fall apart? Could the Fed say we're not going to bail out anybody? Of course. That's why you want to put stop losses in. But right now, with that newsletter risking 35%, you're able to generate 2, 3, 4x returns, which is a fantastic risk reward. Is it risky? It is risky, but the reward is worth it considering with some of these stocks that even you look at Teladoc Health and just the virtual health companies, in the right sectors, these companies were very, very small. You're going to see a huge boom in small caps. And if I'm wrong, all right, you're going to risk a little bit and you'll lose a little bit, but still you want to limit your losses on this. But if I'm right now, the chance to buy so many of these names that are down tremendously, that have not outperformed or kept up with those technology stocks, it's one of the best times I've seen to buy small caps, again, based on risk reward. So I'm going to be sending you guys that offer. We did a great promotion. I'm going to do video promotion on it. If you guys are interested, it's fine. It's Curzio Venture Opportunities. That's our flagship newsletter. That's the one I launched Curzio Research on. So it's something I'm very proud of, something I've been doing all my life. But you don't hear me talk about it often. You don't hear me mention that often. You don't hear me offer discounts often on that product. I'm going to do that over the next couple of weeks for you guys because I really want to see you guys get in and benefit from this because this is where I'm putting my money as well. Okay, guys. So any questions, comments, feel free to email me, frankcurzioresearch.com. That's frank at curzioresearch.com. You can also follow me on Twitter at Frank Curzio. We have a Curzio Research YouTube page where, we're doing lots of videos and video interviews, and we're going to do even more than that going forward. I tell you this the past couple of weeks that Daniel is going to be joining me on the podcast. We're going to have video of it and put that out on just YouTube and on our channel and stuff like that. It's going to be really, really cool. So really upgrading everything, going all in on the podcast because we're really starting to get a lot of downloads and it's going to be a lot of fun. So again, follow me, follow those videos, everything. You can go to Twitter, you can go to Curzio Research YouTube page. And as always, guys, really appreciate the support. Keep the emails coming in. I know a lot of you say the same thing. Frank, I love your podcast. I don't agree with everything you say. You don't have to agree with everything I say. It's fine. It's okay. Just know my intentions, right? For me, I want you to make money. I want you to learn the system. I want you to avoid the bullshit that's out there. And that's what I'm trying to do. That's why I try to provide all these statistics for you. And we've been ahead of this thing in COVID. We're still ahead of it. I feel like nobody's really talking about the stats that I mentioned. Everyone's still worried about it. You don't need to be worried, especially if you're fearing your life, unless you're in that danger zone. And we know that the numbers support it. So guys, just be careful out there. Be safe. Again, appreciate all the support. And as always, I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.